Hey, welcome back. Last time we talked about setting up an IRA for a company that's not incorporated. What if you are? What if you have an S-Corp? What options do you have available to you now? They're actually expanded. So let's talk through those. So first, with an S-Corp, you're required to take a reasonable salary. So that just means that out of that net profit, you're going to have some type of wages. Let's assume here it's 50-50. 50,000 in a W-2, and then you take 50,000 as a distribution or a K1. So it could be any type of balance between that. It could be 30-70, 40-60. We're just going to take 50-50 and make it real easy. So you can still do a SEP IRA. Now the limits are a little bit different because you're incorporated. So now it's based on your wages. So say you take $50,000 in wages or your W-2 at 25%, means you can take $12,000 or make a contribution of $12,500, which is great. And in this case, you're able to even reduce your self-employment tax. That's one reason why people incorporate, is to reduce what they were paying before, and there's no other way to do it other than to have payroll. So if we had wages of 50,000, 7.65% is 3,825. We're picking that up now for the employer and employee. We can see just by doing something like payroll, you've cut your self-employment tax in half. You're still going to pay the same type of income tax, but your self-employment has reduced just by doing payroll. And if you wanted to, you could even do something like a 401k with profit sharing too. So a 401k, profit sharing. So a 401k is really just another deferral or a reduction of your wages. So if you paid yourself $50, like we have in our example, after you cover Social Security and Medicare, you're able now to deduct or defer up to $18,500. And you can also add something like profit sharing, which is essentially the same thing as the SEP IRA. So another $12,500. So those two added together equal $31,000. It just has to be the lesser of $31,000 or $55,000. And all these limits are based on 2018. If you're over age 50, all of these even increase a little bit. You can add some additional contributions. So kind of stepping back, looking at these things, if you're a small business, you want to set something up, real easy to do, real inexpensive, very little documentation. If you're incorporated, you want to set away money, reduce your taxes now, save for the future, and do it in a real efficient way. You could do a SEP IRA, or you can do a 401k with profit sharing. And all of these give you time to look back after year end, see what your bottom line is, and see if a contribution makes sense. So a lot of details here. If we can be helpful, please let us know. We're happy to walk through this and see if it's right for you.